Hi everyone, I'm Anselm. Recently, Citi lowered its price targets for Bitcoin and Ethereum. And honestly, this is not just a simple adjustment to price forecasts. It feels more like institutions are recalibrating how they value the crypto market. Citi cut its Bitcoin target from $112,000 to $82,000 and lowered its Ethereum target from $3,175 to $2,240. On the surface, this looks like an institution reducing its price expectations. But what I'm paying more attention to is another detail. Citi cut its expected net inflows into ETFs over the next 12 months from $10 billion straight down to zero. That is the real key point. Over the past period, spot ETFs have been one of the most important sources of new capital for Bitcoin. When ETF inflows continue, the market tends to believe institutional money is still coming in, and prices naturally find stronger support. But if ETF capital starts to fade, the market has to ask a new question. Without continuous new buying demand, what is supporting the valuation of BTC and ETH? For Bitcoin, ETF capital is extremely important. That's because BTC does not have traditional cash flow. Its pricing relies more on scarcity, the reserve asset narrative, institutional allocation, and market liquidity. When ETF inflows weaken, the premium that the market is willing to give Bitcoin also becomes more cautious. This does not mean Bitcoin's long-term logic has disappeared. It means the market is shifting from the narrative of institutions are entering to the need for real capital confirmation. Ethereum's situation is more complicated. ETH is not only about ETFs. It also depends on on-chain activity, stablecoins, DeFi, Layer 2 networks, and real application demand. If on-chain activity does not clearly recover and ETF capital cannot continue flowing in, then Ethereum's valuation flexibility will be compressed. So this time, Citi's downgrade of both BTC and ETH targets is not simply bearish. In essence, it means institutions are becoming stricter in how they price crypto assets. The market is no longer willing to pay just for a story. It wants to see whether ETF capital is coming back, whether stablecoin liquidity is recovering, whether long-term holders are still buying, and whether Ethereum's on-chain activity is improving. If these signals do not improve, then a lower price target is not surprising. From my on-chain observations, what really matters next is not any single price target, but whether capital is returning to the market, who is still buying, who has already left, and where will the next wave of new capital come from? These questions matter more than short-term price moves. I'm Anselm. I don't make price predictions. I break down the real capital behavior happening on-chain. Price is only the result. Capital behavior is the cause. If you want to follow more on-chain market dynamics and capital flow analysis, make sure to subscribe and follow. See you next time. Let the data speak for itself.